Hello everybody, welcome to today's video. First of all, huge thanks for helping the community grow to 25,000 people. Thank you so much, and I hope the learnings will get better as we continue forward. And also, if you have any feedback, do let me know. I will take that into consideration and I'll try to improve on that. Now, moving into today's video, today we are going to talk about the entire story of how Adani's situation has unraveled in the last 15 days through charts and graphs. I believe understanding and ability to tell business stories through charts and graphs is a very important skill. For example, Hindenburg Research report is nothing but a group of tables, charts and data points basically assembled in a very effective way. And now they are about to gain massively because of that research report. And I hope I am doing a good job with this video because at least it will give you a glimpse of how you can tell a story through data, graphs and charts. So let's jump into the first chart. The primary allegation of the Hindenburg Research report, which started this entire saga, was that these guys are manipulating the stock prices. And they have given the first chart which tells how this entire round tripping of cash is happening. For example, if $100 is generated in the Adani group listed companies, subsequently this $100 revenue or $100 profit will move into the Adani family private offshore trusts and companies. Subsequently, from there, it moves into Mauritius funds and shell entities. That's the allegation. And from there, it comes back as investments or stock purchases of the Adani companies itself. And this is the allegation by the Hindenburg Group. Just to add, this primary table is not something which is prepared by them. There is also a source attached to this table. And I'm giving you the link to that particular primary source of data. Now, subsequently, because of this round tripping, their allegation is that while the Indian regulatory bodies limit any promoter to hold only up to 75% of the company's shares, these guys are able to go beyond that. For example, Adani Transmission, the promoter group share, as per the records, is 74.19%. They are holding 74% of the shares already, while the limit is 75%. And because of this cash stripping, the suspecting holdings is close to 85%. They are holding more by 10.27% of the stock additionally compared to the records. Now, this is just an allegation, but the chart 3 is the proof of the manipulation report. For example, Adani Enterprises stock has gained by 1,398% in the last 3 years. And Adani Total Gas, their share price has increased by 2,121% in the last 3 years. And this is common phenomenon across all the group companies. Their shares have increased massively. Now, you can see the first two charts are the analysis and third chart is the result of what has happened. Because of the analysis present, chart 1, chart 2, chart 3, the total retail trust on the Adani group of companies has come down. And that is indicated by this graph, which says that the market value, the market cap of the company has come down from 240 billion to 140 billion USD in a matter of 15 days. That's a drop of 40% in the market cap. The retailer trust has come down, and the other indication for that is their FPO results. The follow-on public offerings, which was basically a way to raise money through equities for Adani Enterprises, that did not go well because, well, the overall subscription was subscribed to 100%, but the retail participation was at a low 11% only. So, even though the entire quota was fulfilled, it was very obvious that the retail trust in this particular stock has come down. Now, this completes the story of the stock manipulation is what they are trying to prove, and the market also believed that the stock manipulation is going on, hence the trust came down. Now, moving on, let's look at the other angle. This is about the stock manipulation, but the other allegation is about debt. They are holding massive levels of debt. This chart indicates the total leverage that these guys have. Leverage is nothing but debt to equity ratio, and this should not be very high. And if you look at these companies, Adani Enterprises, it is 10.2x. And for Adani Green, it is 14.9x, which means the debt to equity ratio is 14 times. And if you look at ports, if you look at transmission, their debt levels are very high. The problem is, in case if they are not able to generate any kind of revenues, or if their cash flows are not substantial, then they are going to default on these loans, because these are loans and borrowings and debt. This is not equity. And that is the problem that was highlighted in this particular chart. And subsequently, as the retailer trust has come down and the leverage issues are also highlighted, yesterday, the Credit Suisse Bank has highlighted that they stopped accepting bonds of Adani Group as collateral for margin loans. Now, what does this mean? Credit Suisse has stopped accepting bonds of Adani Group as collateral. For example, if you hold a fixed deposit, you don't need to break that fixed deposit if you need some money. You can probably take a loan on that fixed deposit. Similarly, if you hold an Adani bond, Credit Suisse previously was giving you a loan as taking that bond as a security deposit. But now they are saying, we don't trust this bond anymore, so we are not going to give you loan by taking this particular Adani bond as collateral or security. Now this has led to again a massive rout within the bond prices as well. And this chart indicates the same. For example, bond prices which were around $100 have come down to $60, 40% drop. Now this is now slowly getting into the distressed zones. A distressed zone is nothing but the interest levels that these bonds are offering are way too high and the risk is very much compared to what it is beyond a risk-free return. Now, what am I talking about? Let me explain you simply. If Adani bond was previously valued at $100 and if they are basically giving you an interest of $10 every single year, that is a 10% interest. Now what happens? The price has dropped to $60 or $50. On a $50 bond, you are still generating $10 as interest income. So what is the percentage? It is 20%, which means the interest income that you are generating on this particular bond has gone off the roofs. It is 20%. Well, a fixed deposit in the US is giving you 2 to 3%. This bond is giving you close to 20% now. That is a huge risk. And that's the reason why we are calling it as a distressed level. Now, since the bond value is dropping off and the entire retail value is also coming down, the guys who are giving out loans to these guys so far also have to come up to the entire center stage and they have to explain their rationale. And that is what is happening in chart 9. SBI managing director for their corporate departments, he came out and mentioned that all the exposure that SBI has towards Adani is secured against cash generating assets. Which means if these guys default, if these guys don't pay their loans, we are going to go and seize those cash generating assets and we are going to sell it off in the market. That is great, because even if we are going to write off these loans, it's fine, we'll get the money other way. Now that is exactly what is going to happen. If in case the entire situation goes to a bankruptcy kind of situation, some of these cash generating assets will be sold off. And one of the best cash generating companies within their entire portfolio is Adani Ports. So Adani Ports might be the single survivor, or probably one or two more companies might survive this entire bloodbath, but other companies, there is a very high risk they might go down completely. I hope I told you a decent story through charts and graphs. Please do click on that like button and do let me know if there is a better way for me to narrate this entire story. Thank you so much guys. I'll again see you tomorrow. Bye-bye.